So once again, sincere apologies to everyone. We are honestly sorry that we are just starting right now. Please, in case you might have, yes.
No, I know which.
Okay, so in case we may have sent the former link to people, please kindly tell them of this new link. And okay, so welcome to this. For those who are joining us, my name is Omomi Dan Okai. I am the chapter lead of the Abuja Community Covenant University chapter lead. And right now we have a wonderful session here. It's a financial fitness session, which is it's something quite interesting. I know a lot of us have been wondering, oh, what is financial fitness about? And yes, it's some financial fitness and value proposition. This is a 2 day event. Well, why are we doing 2 days? Because yes, knowledge is never lost, and we might not be able to exhaust all our questions alongside a lot of information that needs to be passed out. So that's why we're scheduling this into 2 days. The first session is going to be taken today, and the next would be on Sunday. We do believe by that time there will be no lapses. Please, this is not African time. We're very keen on timing, but quite unfortunately today, we just had one or two hiccups. So this is what is going to be taken today by 6 p.m. And some of our speakers on ground are we have for today, our first speaker is Madam Chiva, Miss Achieva Omoobajesu, she's the secretary for the Covenant University Abuja chapter. Please, I don't know if you can all hear me. If you can, please kindly mute your mic. And the second, okay. The second speaker is also in person of Miss Triumph Ife Chukwu. And we do have as well Mr. Ayotunde. I believe he's on call. But before we go into the whole thing, we're going to start with our speaker today. I don't know if she's ready for us. That's Miss Achieva, who would be, we all know her as the fintech person, the investment guru. She's always there. You must invest every time. She's always in your face. She's going to tell you that, okay, this is what we need you to do. I'm just going to introduce her briefly so that we understand her portfolio because the madam carry weights. So our first speaker is today is a dynamic financial educator. She's an entrepreneur. She's a wealth building advocate dedicated to helping individuals, especially women. So she's a women advocate. Achieve financial independence and long-term security. She's the founder of Achieve Herbals. Um, please, Ayuba, I don't know if you can kindly mute your mic. Okay, thank you very much. She's the founder of Achieve Herbals, a thriving wellness brand.
Please, can we unmute
True
our mic?
A thriving wellness brand and a multi-business owner. Through her work as a content creator, she simplifies complex financial concepts, making topics like investment, wealth creation, wealth protection, and government-related investment options easy to understand and accessible to every Nigerian. She's also the creator of impactful platforms and tools designed to guide people on their journey to financial freedom, including structured well-building systems and educational resources. With a strong passion for empowering others to build sustainable wealth, she has helped a growing community make smarter financial decisions and take control of their financial future. So with that, I invite, let all speakers know that because of time, we wanted to do 20 minutes, but right now, please, we'll just do 15 minutes. So starting off with Madam Miss Achieva Omoobajesu, please, that's our first speaker. You can take the floor. Please, if you have any questions, you have anything you want to share, any questions you might want to share, you can kindly put them in the chat box so that once we're done, you can also pick in those questions. After that, the next speaker is Miss Triumph. So Achieva, you have 15 minutes. Thank you very much.
Hi, everyone. My face clear? Hi. Good evening, everyone. How are you all doing today? I'm guessing you all are fine. Thank you for joining this session today. And today's session, my whole goal for today is to give people ginger, and the ginger is to let you understand basic things that you are missing out from investment opportunities, while the Stanbic team will tell us how they can be of service to us, to guide us and help us to take each of these steps. Okay. So I think I would want to share my screen, but because of time, I won't share my screen so I can be summarizing a bit. Okay. So firstly, I my name is Achieva Omoobajesu, as we all know, and today I am just going to tell you about how I make my money work for me, right? You can't too. So I hope there's something today. Well, the first thing is I don't usually depend on one income source. Please, can someone be in charge of muting people? Will me please help you?
Yes, I'll be in charge of the timing.
No, muting people, because like
Okay, all right.
different like that. Thank you. So, firstly, I don't depend on one income source. To be fair, I have over 9 streams of income. But yes, and a lot of people are like, oh, how do you do this, do that, and all of that? I have just 3 businesses, right? But I have several income. Please, can you mute yourself, Derek? I have several streams of income, meaning I do not depend on just my businesses or even people that are doing 9 to 5 job. You're not just depending on your 9 to 5 job to build wealth. I'm going to give a little short story, right? The first person that ever taught me about investing in Nigerian stock market was a 9 to 5 worker when I was working at NMPC. And we just had a 1 hour discussion, crazily, less than 1 hour, and he opened my mind to a lot of things. And I figured out that, oh, this man is actually not just banking on his 9 to 5. And guess what? He showed me his portfolio. My mouth was open, I could not close it. And it was like he has been building that portfolio since he was in secondary school. Yes, since he was in secondary school. So now this person I'm talking about should be in his late 50s, and if he's going to retire, he's going to be very comfortable. Now, I worked, I don't want to start going into details of who I worked with and all of that. However, I remember one of my ogas retired around that time range, and she was just depending on the retirement amount they were going to give to her. Yes, it's an oil company, but it's a government distance, so she was not really going to see so much in return. However, there were other people that were not even up to her level, but they had backup plans, right? So yes, he started in secondary school and he did not have to wait till he was getting close to retirement to actually start investing in stocks or investing in other investment options, right? And I will say to you for free, just a little secret, that since the time I took action around the time range I started working with him, my portfolio is almost the amount I saw his portfolio almost, it's more than actually now. The amount I saw his portfolio at when he taught me about stock investment. And this is just how many years? Less than 3, 4 years. And yes, so it's not just a thing of, oh, I'm making money from my 9 to 5, or I'm making money from my business. What happens after your business? What happens after making this money from your business? What happens after getting your salary? A lot of Nigerians, I hear this often whenever I talk about investing. They're like, oh, now who don't chop, finish, go save and invest. That's it's who that has eaten now, they'll have enough to save and invest. But that's a very wrong mentality with the average Nigerian, right? Because if you're waiting to eat, finish, and solve problems,
Moreover,
problem will they ever finish? And at the end of the day, you find yourself, you find yourself um spending all you have, and there will really be nothing left to save and invest. I remember during my NYSC. how much was NYSC this thing? 33K as at then. And every month I saved 20% of my NYSC allowance and I still
Still,
invested.
Abi, Kosata.
So at the end of the day, it is not about how much you make, but always about how much do you put aside. And over the years, I have allowed wealth to compound for me just because I started taking action. The average Nigerian thinks stock market is a scam, maybe because of what happened in the 2008 um, market crash, which was a global market crash, not just a Nigeria thing. Because when I hear, oh, I can't invest in Nigerian stock market after 2008 crash, I'd rather put the money in US stock market. There's no difference because it was a global crash. And for Nigeria own, one reason it really affected us was because there was no diversification across other sectors, right? So we mainly depended on the banking sectors. Even like older people, now, if they want to buy stocks, the first thing that goes through their mind is which bank should I go to go and buy it? You don't need to go to a bank to go and buy stocks, right? And if you're going to the bank to go and buy stocks, it's most likely their own stocks that they will sell to you. And that's because of how it seemed as at then that it's only through banks you can actually buy into stocks and other types of investments, which is not true. But the good part is these days now, the all digital stuff has come to life, and there are other ways you can do this even from your phone, sitting at the convenience of your house. All you just need is knowledge, and then you can get started. You don't need to start going to any physical location to say you want to buy one share and then they'll deliver the certificate to you in your house and all those things. It's not needed anymore. So yes, there are so many wealth options. There is the stock market, there is the mutual funds, there are other fixed incomes like treasury bills, commercial papers, federal government savings bond, federal government bonds, and many more, right? So we should all be able to like take advantage of opportunities like that. For example, for example, the federal government savings bond that we usually see every month, a lot of people don't even know how to get it. Okay, how do they go about getting a federal government savings bond every month when it's available? So Stanbic is here today and they are going to show us how to go about this, right? How we can go about this, how to go about even mutual funds, stocks, how to even get loan as high as 100 million naira, and you can comfortably pay it back. The interest rate is very, very, very low. So that is like something I think we should all look forward to at the end of the day. Okay. So yes, like I said, I do not depend on one source of income, and I always save and invest first. See, the first step you should ever make towards wealth creation is for you to build your mindset to in order to like save and invest first before spending that money. That way, safe, there will not be guilt in your heart where you're feeling like, oh, I think I should have, I think I should have used this money for something else. I think I should have invested this money. But that means when you save and invest first, you don't have that guilt. You can spend what's left without feeling guilty that, oh, I have, because you already know that you've already put something aside for your future self. So when you hear people say pay your future self first, that's your future self. Okay, that is your future self. I'm just also going to give a little backstory. I remember when I lost my dad in 2021, right? And yes, as at that moment, he had not paid my school fees as at then when he died. Imagine I did not have savings. That was what I had to first urgently use to clear my school fees before everybody could see front and understand, oh, what was going on in what was going on after he died and all of that. These little things, even as a student that was running my business, these little things made sense to me on the long run. But you see these days even students are like, oh, that how much is allowance, I don't be saving something aside, blah blah blah. As a student I had businesses. As a student I was getting allowance, so but trust me, my business was even doing better than the allowance I was getting, but I still tried to make sure that I was not just depending on whatever my parents had to offer me as a student. So yes, whether you're a student, whether you are out of school and all of that, because considering that there are other people from here that are not in Kuala, so that's why I'm also referring to students too, right? So whether you are a student, whether you are not a student, you should always learn that no matter how little your income is, you should always learn to put something aside for your future self. Okay, and that should be the first step before you consider spending the money. Why? Problem no dey ever finish. Okay, and the third thing I do is I don't leave my cash idle in the bank. A lot of you all have like so much money in your bank account. You don't even put it in maybe savings, not bank savings, in your savings account for your bank, or that they will not later add interest on it because you've withdrawn more than 3 times for that month. Even the bank saving option, if you even use your regular bank, it's not up to what other fintech platforms can give you, or even what you can get from like mutual funds and the likes. Do you understand? So you might want to consider other options for saving, not just leaving the money in your regular bank account and be expecting um that money will grow. It's not going to grow. Some people will be like, oh, I usually leave money that what if something happens? Let me give you an example. If today you make a prayer, maybe your partner is cheating on you, and you say, God, is this person for me? If this person is for me, if this person is for me, anything, if I go out today, let me see everything green. Or if this person is not for me, if I go out today, let me see everything red. Do you know that you would actually see that green and you'd actually see that red? Not because it's actually God answering that prayer, but because you've programmed your mindset to look out for anything green or anything red. So same way you say, oh, I want to keep this money in my account just in case, blah, blah, blah. The truth is, you are looking out for problems subconsciously. So your brain is already programmed to look out for problems for you to solve. Okay. Okay, Wumi, I've seen your listen. Your brain is automatically looking out for problems for you to solve. So if that's the case, it means that every time there's a problem to solve, that is where your money keeps going to. Instead, I tell people, see, look out for opportunities. Tell these people you're saving for opportunities. Tell these people you are investing for opportunities. And it is just going to make sense on the long run. Do you understand? So if at all anything, you know that you are saving for the next opportunity. What if you are saving money and then someone is like, oh, I want to sell this land at a giveaway price, I want to leave the country, or distress sales and all of that. And just because you've not been saving for problems, you are able to get this money and give to this person and say, okay, this is a good opportunity, right? Instead of, okay, I'll give an example. This is a story that Ibukwa Woshika has once shared before about how a girl who was into something like farming or something like that, she followed someone to his farm, and he said he didn't want to, it's not really a farm, a land, said his children were not interested in that particular land because of the location, blah blah blah, that he wants to sell it off. And I can't remember, he said he wanted to move out or something like that, move out of the country. And he told her to bring anything that she has, that he does not mind, that so far she has like a tangible amount and all of that. And I said, okay, just give me till tomorrow, I will get back to you. And all the money she had saved, she had gathered, she brought it to the man, and he sold the land to her at below what that land could ever be worth. And that was because she was keeping aside, not for problems, but for opportunities. A lot of you now, if someone says, oh, I want to leave this country, I want to um dash you this thing, maybe you've been looking forward to that thing, I want to dash you something, right? And at the end of the day, because you have kept something aside automatically, then it means that if the person is willing to give you at a discounted rate, you can easily say, okay, I have this amount, will you take it? But imagine you don't even have it at all in the first place. And then the person will not even, if the person comes, maybe you've been looking out for buying a car, and then that particular car sef that person sell for you, maybe it's one of your dream cars and all, but you've not saved at all for the car, but you're telling God that this year you want to buy a car, but you have not saved 1 naira for the car. And someone is like, do you want to buy this car? Bring any amount that you have. How much do you have? And you're like, me, I don't have any money. You sure you not dash me? You sleep, or you be on your own. But when you look out and save for opportunities or invest for opportunities, you see better options. For example, when I buy lands, right, I look out for opportunities, pre-order and pre-sale prices and all of that. Whatever I've gathered for that moment, I just put it in pre-sale price for my land. And next thing, when the pre-sale is over, say first thing first, the value of the land has gone up the moment the pre-sale is over, talk less of when they start construction in that area. So those are you looking out for opportunities and not problem. What if this person asking for money? You are thinking of black tax. Those people that will come and ask you for money, them they are holding their own money, but you are having the mindset of let me keep in case they come to asking for it. And the last thing I did is I turned financial papers into wealth creating machines. So what do we mean by financial papers? That's the example of stocks, the fixed incomes, the mutual funds, and many more. So even when people are like, oh, treasury bills, then fixed income, treasury bills, commercial papers, and like they want this for capital preservation and safety. I usually like tell myself, like some of my clients, I give you can actually be a conservative investor and still make the most money from it, right? Especially when you do it at a very good time range. At 2024, I remember 2024 November, I did treasury bills at was 27 or 25%, something around that range because inflation was very high around that time range. Now, what did I do with it, right? I carried that money, put part of it in the stock market, invested the remaining part of it in my business. Now, please, who is that? I
Hi,
invested the
Coca,
remaining
please kindly
money.
mute your mic, and Thomas.
I invested the remaining money in my business. So, and the other money, you self as a conservative investor, you're like, oh, I only want to do treasury bills, I don't want to do commercial papers. Yeah, yeah. Those returns you get from it, what do you do with it? Some of you get those returns and go and spend the returns. Meanwhile, you can actually invest those returns in even equity so that it can compound faster, but your capital is still preserved, right? Your capital is still preserved. Just the return you get from it, you get to invest it in other options. If you, for example, as at last year January, you could still see bonds for like 20 something percent and all. People that locked bonds then, they are still getting at 20 something percent till now, compared to now that bonds is like 12% rate, right? So yes, this is how you can actually hack the financial system, turn it into a like money making machine for yourself, right? You can take those returns, put it in stock market, and if you say, okay, no, I don't want to be conservative, I want to focus on stocks, mutual funds, just make sure you have a balanced portfolio where you also have some in fixed income just in case of emergency, right? And then yes, there's mutual funds, there is stocks and all those things. And make sure you always try your best to invest with knowledge. You are not investing blindly because people are hyping that particular type of investment, not because people are saying that they are making money from this particular investment. You are not chasing any stock. Please don't chase any stock, don't chase any company, don't chase any form of investment. Let it come to you naturally, right? And then you know that okay, I've done my research about this company and it's just going to make sense later on. Umi, how many minutes do I still have?
You have 22 seconds.
Okay then. So I hope I have properly explained and opened your eyes and your mindset towards certain things to look out for when you want to start creating wealth. So Triumph will take over from here, where she's also going to like show us some things that we probably did not know exist, especially with the Stanbic IBTC investment options. Okay, so Triumph, over to you.
Okay, before Triumph joins in, let me share a little profile regarding that. So for those joining us, this is the financial, excuse me 1 minute. So this is the financial fitness and value proposition session. The initial speaker we just had was Achiever Omoobajesu. She's into investment and she's an all-rounder. You can see her. The madam, she's huge. She carry. So if you see her, bill her.
I beg
However,
you.
so we're going over to Triumph. Triumph is a personal banker. She works with Stanbic IBTC. She's a stamp and a proud Covenant University alumna, dedicated to helping individuals manage their finances better and achieve their financial goals and ease. So, in partnership with the Covenant University alumni community, she provides simple, personalized banking solutions designed to help members save better, across access opportunities and grow their finances with confidence. So with that, we introduce Triumph. You'll be having 15 minutes. If you want to go less than that, you let me know. So you do have the floor. The next time you'll be seeing my face will be 5 minutes till the end of your time. Thank you.
Okay, good evening, everyone. You're welcome to this session. I must apologize for the delay. So my name is Triumph, and I'm a personal banker with Stanbic Bank, and I thought this session should hold because it's a very important session. I believe that a lot of people lack information, and they need this information, to make better financial decisions. So part of the things that you saw on the flyer when it was going around was about our single digits mortgage, where you can access up to 100 million naira at 9.75%. Now, I'll give a brief backstory on this mortgage. When my mom was in the bank, she served 22 years in the bank. And when she was leaving the bank, she was like, okay, what is the substantial thing that I'm going to carry out of this bank, right? After 22 years. I mean, she left as an ADM to get an appointment, right? So this single digit mortgage came about. And she used this, as at the time, we had a house already in Lagos, right? So she used this mortgage to get another property in Lagos, I think in Ogudu area or so. And with that mortgage, she got a block of 6 flats, right? And then she used that with the mortgage she got, she used it to build 2 extra flats. And she put tenants there. The rent the tenants were paying were financing the mortgage she took. Now, we finished paying this mortgage as I think 5 years ago. And then just 2 years ago, and then we got the title documents of the property, obviously. So now 2 years ago, we just asked the markets, how much we get if we sell this property? As at that time, it was 140 million. And mind you, this mortgage she took at that time was not even up to, it was like 55 million, right? At a single digits like this, right? So 2 years ago, they said, oh, they said it's 140 million naira. Now, we checked again. I think we checked this year to see how much it's going to sell for. They're telling us now, they're pricing us 700 million naira for that property that we got via mortgage. Now, I sell this thing to people because don't just say no when an investment opportunity comes. If at all you're going to take a loan, make sure it's financing a long-term asset. Do you understand? Now, this opportunity is here where you can access, houses at 9.75%. It's not for lands, it's for houses. So you can access it even if you already have a house. This opportunity is available to you as well, where you can put, people inside, and you can rent it out, and the rent they are paying is financing the mortgage alongside with your salary or your other income. And at the end of the payment to get your property, it's yours for life. So why say no to this kind of opportunities, right? And even what Achieva spoke about, you can even still take, loans or financing options to finance investment opportunities. I have another story concerning that. Before I came into banking, I had an opportunity to sell a landed property in Guzapetu for 13 million naira for 1,000 square meters, right? And this person took a loan to buy that land. And those of us in property business know how much, 1,000 square meters is now. I just checked now, and 750 square meters in Guzapetu is 200 million naira. So the purpose of this meeting is to show you these options that are available to you. don't just say no when you have like an investment opportunity around. The bank is here to finance, help you finance whatever it is at that point in time, whilst your assets, increases in value. So I didn't want to take much of your time. I'm going to hand it over to my colleague to really expatiate more on this, on the opportunities available to you. There are several opportunities, trust me, that are available to you. You are really not broke, you just lack information. And that's what this session is here to help you with. So thank you very much. So I'll hand over to Mr. Ayotunde Sunday to continue the meeting. Thank you.
Okay, thank you very much, Triumph. So before we before I go to Mr. Ayotunde, please, if you have questions, you can kindly drop them in the chat box. We already have a question there, but at the end of and please kind of like ask who you're asking this question at, so we know who would come back to answer. So before we go over to, let me a little introduction, Mr. Ayotunde Sunday. Mr. Ayotunde is the regional manager, personal clients to Stanbic IBTC Bank. He's dedicated to delivering seamless banking solutions that support individuals in managing their finances and achieving their goals. Okay, so since we had less time in which we still had 10 minutes of our time, we're going to give Mr. Ayotunde 20 minutes to do his presentation, and then so everyone who might want to tap into these opportunities given to us by Stanbic IBTC, we can put the necessary calls across and know who we're going to send these informations to. So if you have any questions, you have anything, you just drop them in the chat box. After this whole presentation and timeout, they would come back to that. So Mr. Ayotunde, you have the floor.
Hey, good evening. Can you hear me? Please confirm you can hear me.
Yes, we can.
Yes.
Okay. I'm also going to have to seek the permission of the host to be able to share what I have to present to you this evening. So if the host can give me that permission to be able to share so that I can go ahead and share. So while we're at that, let me just quickly, briefly introduce Stanbic IBTC. Okay, I can go ahead.
Yes, please.
Okay. All right. So, Stanbic IBTC, as we know it, is one of the financial institutions in Nigeria, one of the banks in Nigeria. Stanbic IBTC Bank is a member of the Stanbic IBTC Holding in Nigeria as it is. And please confirm, can you see my screen now?
No. Okay.
Yes.
Okay. Okay. All right. Thank you. All right. So Stanbic IBTC Bank is one of the members of the holding, Stanbic IBTC Holding. And Stanbic IBTC Holding is also a member of the Standard Bank Group of South Africa, which is also partly owned by the biggest bank in the world, that is the ICBC in China. So we have Heritage IBTC Holding started the holding structure when it comes to financial services in Nigeria. And the reason is because right from time, we targeted a situation where people that come in do not have reason to go elsewhere. So what is a situation where once you come in, you have end-to-end financial service solution. So that is the reason why we started off that holding structure, which you've seen some other banks replicate now. And so within the Stanbic IBTC Group, we have the Stanbic IBTC Bank, we have the Stanbic IBTC nominees, we have the Stanbic IBTC Capital, we have the Stanbic IBTC Asset Management, we have the Stanbic IBTC Pension, we have the Stanbic IBTC Trustees, we have the Stanbic IBTC Insurance, Stanbic IBTC Stockbroking, Stanbic IBTC Insurance Brokers, And we also even have a fintech that is called Zest. And like I said, all is geared towards ensuring that you are able to have an end-to-end financial service available to you. As a result of coming in contact with any member of the group, we want you to be able to have access to any other financial services that you may need without having to stress about it. Also, what you have noticed that Stanbic IBTC is the only Nigerian bank with a triple A Fitch rating. I'm sure most of us know what Fitch is. Fitch is an international rating agency, and just like we have for Moody, S&P, and some other ones. So since 2007 or 2008, that Stanbic has gotten to that triple A Fitch rating. Is not dropped since then. And it's worthy of note that Stanbic remains the only bank that has ever attained that AAA rating. It goes to show you the quality of corporate governance that we have at Stanbic IBTC and the future that lies ahead of it, the way it's managed and things like that. And also, how does that rub off on you? It's a business that when you are in relationship with, you can sleep with your eyes closed because of the way we conduct business. So let me quickly jump to
Mr. Ayo, are you there? Mr. Ayo, Mr. Network. Am I the only one not hearing him?
Okay, I think he's frozen. Triumph, please, can you get in touch with him? Let's know what's going on.
Yeah, I think his network logged him out. While we wait for him, Triumph. Okay, she's trying to reach him, right? And the other speaker also say something. I thought there's a third speaker, right?
The other speakers are supposed to be slated for Sunday, but I'm trying to reach Triumph to see what's going on. I think it's his network that threw him out of the call.
Yeah, it's his network. He's trying to join back. So apologies for the delay. In 30 seconds, he'll be back. He's trying to reconnect.
If you have questions, please
Okay,
the
so
chat.
in the interim, while we wait for him, Triumph, please, can you respond to this question? I think it was directed at you whilst you were on the call. It says, please, can you explain this mortgage system of owning of, no, sorry, the first one was, are these opportunities available to persons in diaspora? If yes, what are the requirements to access them? So I don't know if you can quickly just chip in that before we have him come back on the call.
Okay, thank you very much for that question. So yes, this is very, very much available to people in the diaspora. So Mr. Ayotunde Sunday is supposed to expatiate on that, on the requirements. However, you can send a DM to me. I'll drop my number in the chat section so that I can give you the requirements of for a diaspora person. But yes, it is fully available to everyone in diaspora. Yeah, and you can also access this mortgage with your spouse, meaning that you and your spouse can join income and access 100 million for a house at 9.75%. So I really hope this answers your question.
That's a normal, no. This,
Sorry.
do you work for the underground?
Yeah, this is my family travel.
No,
Please,
it
can
wouldn't.
someone
Not on our
mute
network.
Eva?
Sorry, beg your
For
pardon.
Tryon,
Not
so the
on our
next
network,
question
but
is,
you could
please, can
try
you explain
chatting
this mortgage system
on
of owning
the
houses better?
on the read and see. Yes.
Okay, so how the mortgage system works, I'm just going to explain it in, a brief summary, basically. So how the mortgage system works is we can only finance houses. This 100 million is available for houses. Now, it says that you can access up to 100 million. So to know how much you are eligible for, we need to know your age,
Okay,
and
I'm
we
back.
also need to, okay, all right.
I'm
So
back now.
let's
Just round
Apologies
up,
for
just round up on that so that he can just continue. Just round up on that.
Okay, so we need to know your age and your net salary. However, you can access it with, because there are some institutions that pay allowances and, or whatnot. And also, if you have a side income, we can also,
I just
add
said to my
access
group
it to
this
that.
thing. I don't know what this thing is all about.
So also, it's available to self-employed persons as well, not just salary earners. So okay, how it works is that we will need the title documents of the property because that acts as the collateral. We will need the title documents of the property that you want to acquire. And then these other, we also have to verify your means, of income as well to be able to access the mortgage. So I would hand over the mic to
Okay, so we'll hand
Mr.
over to Mr. We'll come
Ayotunde.
back to the other questions, Dr.
Yeah.
Obia and Mama Bear. We see your questions. So after Mr. Ayotunde's final presentation, then we'll come back to those questions. Please keep the questions coming in. Thank you very much.
sorry, I would need permission to share my slide again. All right, so while that is going on, so we from Stanbic, we are represented by the bank representative, the insurance representative, and our asset management or investment representative in this session. However, would be taking the full presentation for investment and insurance on Sunday. So we're going to only look at the banking presentation today, just to note that. But however, if you have your investment and insurance questions you want to ask today, we can also attend to that as well. So let me just quickly share my screen and then I can continue from where I stopped. So I was done introducing the Stanbic IBTC Bank and Group to us as a whole. And I started talking about our value proposition. So our value proposition in Stanbic IBTC is not only about the financial fitness training, but the financial fitness training is very prominent in our value proposition. And the reason why it's so is because we are personal clients. So I was talking about personal client being the unit that handles the matters of individuals in Stanbic IBTC. So I was saying that we at personal clients, our objective is to ensure that as a result of your relationship with us, you are able to live a better life. How do we help you to live a better life? Is understanding, making you understand that you're on a financial journey. And that's financial journey, just like life journey is generally. There are stages in those financial journeys, and there are key financial decisions you have to make at those different stages in your financial journey. So we help you to understand where you are in your financial journey and what are the key decisions that you need to make at those stages, and how can you take the best decisions at those stages for you to be able to make the best out of those stages of your financial journey. And we also give you a couple of products or solutions, as the case may be, to support that financial decision that you're taking. And that's the whole essence of we helping you to make better financial decisions that will result in a better life. So how do we help you to be able to know where you are in terms of your financial journey? Is through the financial fitness program. So the financial fitness program on its own is like an hour program that we hold with people. However, I will just do a brief talk about it, and I'll move on to some of the things that we use to support your financial decisions in those stages of your financial journey. So this is what our financial fitness looks like. I just decided to put it like something like on a single slide, while the subsequent two slides we just do a bit of breakdown. So naturally in our financial fitness academy or session, we'll talk about the self-assessment of your finance, the budget and financial planning, saving and investment decision, retirement planning, family and asset protection, legacy and transfer of wealth. I will speak to only the self-assessment of finance as we go down in the presentation. So this is what our financial fitness look like. You and your family in the middle. Whatever decision you make rubs off on your family. Whatever decision your immediate family makes rubs off on you. That's the reason why we have to put it together. What I will say with respect to this, and I want us to take note of, is the fact that you and your family are unique. The earlier speaker talked about this as well. Don't do things because others are doing it. Why? Because you may not be at the same level in your financial journey as the other person. So you don't have the same financial goal. You are not on the same level in terms of your financial journey. So why the decision for the other person might be the perfect fit for the person, it may not be the same for you. And it's not just about spending, even in investment and any other thing that you're doing. Then going deep into the financial decisions that you make, consciously or unconsciously, we make those decisions all the time. There are 4 of them, which is the create and build. The create and build has to talk about how you build wealth, how you make money as a salary earner, as an entrepreneur, as a professional, as an investor. How do you make money as a business person and things like that. And I think that the first speaker has also, sorry, I'm getting a feedback. All right. Okay. So the first speaker has also spoken largely to create and build and save and invest. So to some extent, I would not say much. She has already said something which is very, very key about creating and building. Don't limit yourself to only one stream of income. Have multiple streams of income. It helps you to be able to withstand the risks that are associated with creating and building, because all these financial decisions have risks associated with them, and we must identify those risks and mitigate them to be able to make the best out of those decisions. One of the risks is with creating and building is having limited source of income. It shouldn't be. And one of the things I tell people is allow your space to pay for you as you pay for your space. So we are humans. We occupy space per time. What do we do with that space? A lot of time, the spaces that we occupy, we pay for them. How do those spaces pay us back? In your estate, what do people need that is not available that you can provide and as a result earn money? In your committee of friends, in an association like this, what are the things that you can do as value proposition that you can use to get income? So think about that. The other thing I also say to people, especially when it has to do with building wealth, is that if you do not, especially in an inflationary economy like Nigeria, if you do not earn inflation, you are always going to lose out. So people talk about inflation all the time, especially people are always looking for where can I invest my money that can hedge against inflation, that will be able to give me a return that is higher than inflation. You hear people ask those kind of questions, and the answer I give to them is, you may not necessarily get where you will get returns that will be higher than inflation rate, especially when it's crazy in Nigeria. What you need to make sure you do is, as you're paying inflation, make sure you're earning inflation. I'll give an example of an aboki that sells oranges. So he bought the orange 100 naira. He can make profit, a lot of profit, selling it 200 naira. But the Aboki understands that Nigeria is in an inflationary situation. So Aboki decides that I'm just going to sell this orange 400 naira. So it's either you buy or you go. You just put it at 400, no price control in Nigeria. So he understands that fundamental of earning inflation and takes advantage of it. Most of the traders who have not even been to the four walls of school or any academic institution understand this concept. We who are learned should be able to do more with that. So we should also look for opportunities to earn inflation. And one of them is what Triumph was talking about earlier. Things that you can do to take advantage of the time value of money. Those are the things you should be looking at when it comes to creating and building. The next one is live and enjoy. So live and enjoy. I think the first speaker also spoke significantly to this, how you spend money. Naturally, the order should be create and build, save and invest. But the reality for most of us is that we live and enjoy before we save and invest. And just like she said, most of the time, that's the reason why we don't have anything to save and invest. So saving and investing, just like she said, has to be a conscious decision. Warren Buffett, I'm sure most of us know Warren Buffett. Warren Buffett said that we shouldn't save what is left after spending. We should spend what is left after saving. That is what he said. And we know that when it comes to anything that has to do with money, Warren Buffett is an authority. So it's important that we make that conscious decision to save first before we live and enjoy. Because the truth is that if you live and enjoy, you spend first before saving and invest, there is not likely anything going to be left. And she also gave a reason for that. She said, problem no dey finish. The way I explain it to people is this simple economic principle that we all know by Adam Smith, which says that human needs are insatiable. So if human needs are insatiable, it means that we can never really get to a point where we're fully satisfied with our needs. We can really never get to a point where we're fully done with spending. So if you put it first, you will never actually really get to that point where you have anything left to save and invest. So I tell people this, saving and investing is not about how much you have. It's not about how much you have. It is not about how big your expenses are. It's just a conscious decision that you have to make. It's about the culture of it. And saving and investment also is not about how much you save. It's not about how much you invest. It's just about taking that decision to do that. I use another analogy to explain it to people. And what I say is that whatever it is that 100 naira cannot do, most of the time 90 naira, whatever it is that 90 naira cannot do, most of the time 100 naira cannot do it as well. 99% of the time 100 naira cannot do it. As small and as insignificant the 10 naira difference is, just put it aside. Build that culture, build that habit, and you will see that it will help you to be able to develop more. Now, one thing I'm just going to quickly say about save and invest is this, because I heard the first speaker mention about not keeping money in your savings account in the bank. I beg to differ a bit from that opinion. Save and invest are two different things. So save and invest they are not like twins. They're like brothers or sisters or siblings. So save is keeping the money safe. So a lot of us make mistake of interchanging investing for saving, and that is where we'll have issues. So save is separating it from being spent, keeping it safe. That's where the word save came from. So anything that is going to put the money at risk is no longer saving. Anywhere you put the money, where the money is no longer going to be safe, is no longer savings. And that's the reason why you will always continue to need your savings account in the bank. Why? Because you want to keep the money safe first. Then take your time to be able to now invest. That is putting the money to use. Let the money now generate more. Let it work for you. Now, in doing investment, there are a lot of things that you have to consider. Consider starting with yourself. If we're having a full financial fitness session, I would have shown you money personalities. So which money personality are you? Are you a wary type? Are you a big spender? Are you an entrepreneur that once money comes into your hand, the next thing is how can I multiply it? How can I double it? So each of those money personalities, they have their risks associated with them. Are you a risk averse person? Are you a risk taker? Are you in between? So you need to know all those things in helping you to decide your investment options. Because, for example, somebody who by nature can't take risk. There are people like that who by nature can't take risk. They're like this. If they put their juice in the fridge, they can't sleep. They just have to go continue to take a sip from the juice every now and then, and waking up just because that juice has not finished. Until when the juice finish before they will be able to sleep. We have people like that. We have people that they will just be wondering if they keep their car outside, hope somebody has not stolen the car, and they can't sleep because of that. So by nature, some people are seriously risk averse. Those kind of people can't do some kind of investment, or else the investment itself will give them health issues, health, hypertension, and some other things. So while I heard earlier that, yeah, share and all the rest, you can invest in it, it's not for everybody. It's not for everybody. It's not everybody that are naturally cut out for it. So you need to know yourself, understand the level of risk you can take, understand the kind of business that you want to invest in, and a whole lot of other things. While you're trying to get that understanding, the money has to be saved first somewhere. So that is where saving come in, and that's what you can do with saving. The other one is share and legacy. What are you known for? Okay. All right. So what are you known for? What are you going to impact other people with and things like that? Yeah, so that's also a financial decision you need to consciously make, planning against your future, against your tomorrow, that of yours and your family. Plan and protect has to do with things that helps you to protect yourself from all the risks that are associated with the four financial decisions that are there. Now, I said I was going to talk about self-assessment of your finance. Just as you will sit before a medical doctor and just the doctor will ask you a couple of questions to be able to at least have an idea of what is going on with your health. We are also done with finance and Stanbic IBTC. So you can sit before, but we've automated it. You can sit before the system to ask you a couple of questions, you answer, to be able to prescribe, diagnose where you are financially and prescribe one or two things that you can do to improve on it. So that is what we have here. So if you scan this QR code, it will take you to where you'll be able to, it's strictly confidential. We are not going to know what is going on there. No body on this call will be able to access what is going on between you and the system. So please answer the questions truthfully, and you'll be able to get a sincere feedback that will help your finance. We're going to share the slides so people would be able to have access to do this. So now I was saying that in the course of your financial journey, having known what you need to do per time, the next thing is how do we support you to be able to get those things done, to take those financial decisions when it comes to investing, saving, when it comes to even acquiring assets and things like that. So I'm just going to just flip through the solutions that we have at Stanbic IBTC Bank towards assisting you in your financial journey. And I won't really emphasize on all these ones. I will just go to the one that is really prominent in the feedback we got when we shared the questionnaire earlier, which has to do with mortgage. So these are everyday banking solution. I believe we've seen it on the screen. This is a bit peculiar to Stanbic IBTC when it comes to the everyday banking solution. It's an account of threes and zeros. I know that a lot of us on the call may be less than 50, but we have people that will spend on when it comes to health that are 50 years and above. Get this account for them. Stanbic IBTC has a negotiated health insurance scheme on holders of these accounts, 50 years and above. With 35,000 naira premium per year, you have access to a comprehensive health insurance. Apart from the zero account maintenance fee, free debit card, free checkbook, access to fund managers and will services. The health insurance is very, very key. You can take advantage of it. So at Stanbic, we try to make life easy for our customers. So we developed what we call a digital lending suite, where everything you want to access when it has to do with loan, you can do it at the comfort of your home. So once you have access to our digital lending suite, any kind of lending that we do, you can start off from there and be able to have access to it. We have an array of lending facilities that can help you in the decisions you want to make part-time. Like Triumph said, it is important that we understand that lending on its own is not bad. It's what you use it for. I tell people this, very simple. If you want to borrow, know the cost of your borrowing and know what you are going to get out of what you're using the money to do. In as much as what you're gaining is more than what you're paying, you should always go for that borrowing. That borrowing is always going to improve your life and make your life better. If you don't take that decision, you'll be worse off. So it is always important when the opportunity to borrow is there and the gain you will get is more than the cost you're paying. Go for it. It's an improvement on your life. So we have different lending solutions. I'm sure when you look at the pitch, when we send it to you, you'll be able to see them in particular, and you can reach out to us or get us to reach out to you if you need more information on them. So I won't dwell on them. Let me just go straight to the, so this credit card is also, this credit card is 100% of your salary. You can use it free. If you are interested, you can reach out to us and then we can show you how you can use the card free. It's for emergency uses. And we have vehicle and asset financing as well. We finance solar power, solar inverter, panel, generator, all manner of household items apart from vehicles. And we are in partnership with BYD. So you can get electric vehicle from BYD through Stanbic IBTC. You won't get the price that you will get it on your own. You won't get that price is lower with Stanbic IBTC. We have negotiated it downwards. So let me quickly go to the home loans. So the home loans in Stanbic IBTC, we have different options. I will speak to the MREIF predominantly, but I need to help us understand that we have different options. Apart from the MREIF, we have the help to own. We have the off-plan. The off-plan is the property is still being constructed. We have diaspora mortgage, those who are heading abroad, living abroad, or working abroad and want to get property in Nigeria, we can finance them. And Stanbic IBTC, we can buy back your current mortgage in another bank if you are not convenient with the terms. And if you already have a property that has a valid title, we can actually give you money because of that property that you have. We call it equity release. We do that as well. You can use 25% of your pension. You can use 25% of your pension as equity for the mortgage. Now, let me go to the MREIF. The MREIF is 9.75%. It cannot increase. So the good thing you need to note about it is the fact that the interest rate is something you can plan with. It can only go lower. It can't go higher. It's not subject to MPR. So it can only go lower. When Ministry of Finance Incorporated initiated this fund to be able to make people have access to mortgage at cheaper rates, it started with 12%. and it's been reduced after then to 9.75. The good thing is that the people that had existing facility were allowed to the pricing was dropped for them, even though they already had it on the system. It was dropped for them to 9.75%. You can take it for up to 20 years, depending on how many years you have left to reach 60 or you have left in service. The minimum equity contribution from you is 10%. You can do more than that if you have the capacity to do that. So basically, that is what the MREIF is. There are conditions to it, of course. You must have a source of income that we can verify, which can be salary allowances and things like that for paid workers. It can also be a business person. So we also do it for self-employed individuals. And I tell people this, if you have 100 million today, rather than using the 100 million to buy a house, just taking a decision of taking this MREIF at 9.75% and putting your 100 million in money market fund. The money market fund is one of the less risky mutual funds out there or investment out there, almost zero risk to it. So, of course, we know the principle of investment, the lower the risk, the lower the return. So even with the lower return that mutual fund, money market fund has, you still have about 15%. So just putting the money in mutual funds and taking this at 9.75 is enough for you to make a spread, make a gain. So if you have your money, even to buy the property, don't tie your money down to it. Rather, go for the MREIF. So I think, I don't know who is speaking. Maybe you're trying to count me down. I don't know. So I think I will just stop here. Like I said, on Sunday, my colleagues from insurance and investment are going to be able to speak to that aspect of our presentation. Thank you. I will take questions now.
Okay, thank you so very much, Mr. Ayotunde. Okay, so for those who joined today, this is the first segment because we have like 5 speakers and they all have different segments to look into. Like he did mention, he said that we do have for Sunday, for those who might be joining us on Sunday, it's also the same time, 6 p.m. We do promise you that we will not be having this challenge we face today. So by Sunday it would be 6 p.m. And on the call on Sunday, we'll be having Mr. Adeboye Oshoba. He is the regional manager, Stanbic IBTC Insurance Brokers. And we will also be having wealth manager Joseph Oduma. He's the wealth manager, asset management. So for all the questions that are some other segments on investment that could not be covered today will be covered on Sunday at 6 p.m. So we had a question in the chat box. Please, if you have more questions to ask before 8 p.m. in the next 10 to 15 minutes, we'll take some questions. For Triumph has dropped her number on the chat box. So for those who might need to message her personally, we would like you to do that. Emmanuel, I don't know if this is a message said, I think in my opinion, the goal is to shorten the time for savings to investments. Savings as a standalone is not the end goal. So I don't know if Mr. Atunde wants to expatiate on that. I don't know if that's a question or just elaborating on what is being said there. Then also, he also said he'll be interested in the senior citizen account. So please send info on the MREF. Okay, so Mr. Ayrton, I don't know if you want to take those two. I don't know if it's a question or it was just like but also someone was like, must it be 100 million for mutual fund? What is the lowest investment for mutual funds? That's French lady. So can you kindly just respond to those questions?
Okay, so I was just using that as an example. The lowest investment on mutual funds is actually 5,000 naira. It's as low as 5,000 naira. So with 5,000 naira, you can start investing in mutual funds. Of course, returns is always a function of your principal. So if you want to get, it's not only a function of your interest rate or your yield rate, it's also a function of time and a function of your principal. So if you want something substantial, you also have to put in something substantial. So I'll encourage you to also do more than the 5,000. However, the minimum is 5,000. With respect to the other question regarding the MREF, yes, we'll share this page with you. And the last page of the page, sorry, let me just quickly go there. On the last page of the page, we have a QR code, which, so this page, if you scan this QR code, we will be the one to reach out to you. So when you scan this QR code, you would have stated what you want us to discuss with you. So what we would do is we'll call you and reach out to you and speak to you on that particular thing that is of interest to you. For MREF, yes, you can scan the QR code and then we'll be able to provide more information on that. Now, with respect to the somebody was speaking to savings, so that the end goal is to, of course, invest. Yes, that's what I said. The end goal is to invest, and as much as possible, you should try and shorten the time between saving and investing. However, let's remember that the objective of investing is to keep both the principal safe and get returns. So if you need a bit of time ensuring that you keep the principal safe, I think it is important that you do that. So while you're doing that, you keep the money in the savings pending that time that you will be able to ensure that the investment you're doing, you have a full grasp of it such that your principal is not eroded. So that's my comment on that. I don't know if there is any other question that you want us to
Yes,
address.
the lowest is 5K. When does it mature, or what term is used for mutual funds?
French. I think you're
Okay.
from. Sorry, I believe this person is from my community, and I advise you just go through the course, because there's a detailed breakdown explaining this already. There's no limit time for mutual funds, right? Aside from the one that has like 30 days
Holding period.
holding period.
Period. Yeah.
So yeah, please just go through the course in detail.
Okay. All right. So
Uh,
for mutual fund, so
yes.
mutual funds is a pool of funds, right? It is a situation where people who have money to invest, they come together and put the money, their different portion that they have. Somebody who has 5,000, somebody who has 20,000, somebody who has 5 million. They all put it in the same bucket. And there is a professional fund manager who will take the money from the bucket and invest and bring back the yield. That is basically what mutual fund is. So where the funds are invested is what gives the name to the type of the mutual funds. So for example, money market fund is called money market fund because it is invested in money market instruments. Equity fund is called equity fund because it's mostly invested in equity. Equity is stock market. So that is where those funds get their names from. So why would somebody, for example, just invest in equity fund instead of investing in shares directly? A lot of people can't do the stress of investing in shares by themselves. They don't understand the market well enough. So they want to put the responsibility on a fund manager who is a professional who can do that on their behalf and come back with a yield for them. So that's why people will possibly do that. So there is for mutual fund doesn't really have, it's not tenured. It's not a fixed deposit. It's not a treasury bill. It's not a bond. It's not a commercial paper. It's not tenured. It's something that you're putting the money there and it will continuously be invested in that area that the that type of mutual fund is meant for. So it will continue to be invested there in as much as you have your funds there. And the good thing about mutual funds, it's a compounding system. So as the return is coming back, the return is added to the principal and everything is compounded and reinvested again. So it's compounding. It's really a good one. About Einstein said that the eighth of a wonder of the world should be compound interest. And he goes further to say that those who know it, they earn it. Those who don't, they pay it. So it's important that we take advantage of the compounding interest, and that can happen through mutual funds. So there is really no limit in terms of tenure to mutual funds. It depends on when you want to keep it for, and getting access to your money is also quite easy. I think within 24, 48 hours, you can get your funds, except maybe those that are really into the equity that you can get within a week or so, you can also get the funds out. So minimum holding period that you have to keep the money before you can take any further decision on it is like 30 days. So, and from that 30 days, you can have access to your funds, and you can increase it at any point in time. You can part liquidate it at any point in time. Yeah.
I have
Okay,
questions.
so okay, sorry, Machiba, this came in before your question. So for Kingsley, please, I think you reach out to that number. Mama Bear has at 9.75 per annum interest rate for a property valued at 180 million, loan of 100 million, whatever. Okay, so let me read that for those. At 9.75% per annum, interest rate for a property valued at 180 million, loan of 100 million with 80 million equity. How much would one invest in mutual funds to get returns that pays your mortgage interest? Did you
Okay,
get that question? Okay.
yeah, I got the question. I think I
Then
can see
Achieva,
it
you'll be after this, your question comes up.
Okay. All right. So why the interest rate for the mortgage is fixed? Mutual funds doesn't have interest rates. More like it has yield, which means the investment has to be done. And when you get the return, it's shared to all those portfolio members in the fund according to what they have contributed into the portfolio. So since mutual funds does not really have a specific yield rate, you can't make this kind of comparison. What you can do is to say, okay, historically, what has mutual funds been doing? Okay, let me peg it at 15%. Then you can compare. And if you are comparing like for like, 100 million against 100 million, 15% is always bigger than 9.75%. It's always going to give you more. So that's how it is. So I think that if you want to compare how much when it comes to mutual funds can give you the interest rate that you need on the 100 million naira loan from mortgage, two things you need. First of all, you need to assume a particular rate for the mutual fund. You will need to come to a particular rate that you say, okay, I'm comfortable. Let me just pick this particular rate for mutual funds. Then we would provide you with a schedule for the two of them. This amount, this is the schedule, this is the interest you'll be getting on this rate, and these other amount for the loan at 9.75%. This is the monthly interest. We can provide that with you without even having an account with us. It's part of the things that we do for people to be able to help them make financial decisions. So we can do that for you. Thank you.
Can I ask my question now?
Chiba, go ahead.
Okay, so speaking of savings, right? Because I spoke about savings earlier, you said you didn't agree with something I said, where I was like, if at all you are saving.
Okay, sorry, I didn't say I didn't agree with it. I said I'm not fully aligned with it. The fact that you shouldn't put money at all in savings accounts. I'm not fully aligned with it. I just decided to provide a context to it. Yeah, that's it. Yeah.
Let me properly say what I said again, then you can let me know if that's a better option, right? I said, instead of leaving your money in your bank, where if after you've like withdrawn money from the account after 3 times in a month, they don't pay you interest on it. You can use another saving account, meaning you could have like another bank account that is a saving account. That's where you just put money in to save, or you can use like a fintech platform or even a mutual fund option like money market or something. Do you understand? Because I don't know, from my own point of view, I don't think it's best that you keep money from the same account you spend from and call it saving. If at all you are saving, put it somewhere that there's little interest at least adding on the money. So it could be that I can have like 2 or 3 bank accounts with Stanbic, for example. I could have one current account. I could have one normal one that I use for my regular day-to-day spending, and one that I know that is strictly for savings. I don't touch money from there. I just put in money there and they add interest for me regularly. How
Yes,
about
very valid, very valid, very, very valid. People can easily get things mixed up when they spend from the same account that they are supposed to be saving. So I think I got that particular context to it, and it's very, very valid. And just like you said, there are different options, even if it is with a bank that you can save. For example, Stanbic started something, and we just started a pilot this week. And what we're trying to do is to help people to be able to save without even knowing it. So we call it a 1 Naira campaign. That's what we call it in Stanbic. And so it's at the pilot stage, you start with 1 Naira and ends on 100 Naira. So I selected 100 Naira. So what I noticed is that from my account, the one I spent from, 100 Naira was taken on the first day, 200 Naira was taken on the second day, 300 Naira was taken on the third day, and so it will continue to be. So after some time, you would notice that your daily, the daily saving that will be leaving that your spending account to the account where you're saving can go as high as 5,000, 6,000, and more than that, depending on your capacity to be able to continue. And if you can't continue at that point in time, you can actually stop that and start again. So people can do 1 Naira, people can do 5 Naira, and it continues to grow, add up every day. So I think what you said is actually really valid, and all is geared towards ensuring that people are able to have something for the future. Every money that comes into our hand always have a seed element of it. And it is important that we keep that seed element in order to be able to plant and generate more. Thank you.
All right, thank you so very much to all our speakers today. To Mr. Sunday Ayotunde to Triumph, and to Ms. Achieva from the alumni body. I want to say thank you very much. And we do apologize to everyone who tried to join in initially and the time spent. We do apologize. We promise you a whole lot that on Sunday it would not be the same. For those who would want to learn more about the investment opportunities available to us from Stanbic IBT, please you will join in by 6 p.m. on Sunday. Triumph has dropped the number on the chat, so you can reach out to her for more inquiries. You can reach out to Triumph on that number. So I want to say a big thank you to everyone. Yes, this has been the financial fitness and value proposition segment here from the Kuala body and Stanbic IBTC. I want to say thank you very much to everyone who has joined. So we'll see you on Sunday by 6 p.m. To all our speakers, thank you for your time. Thank you for your knowledge, and thank you for all the opportunity you've brought. So thank you so much. See you on Sunday by 6 p.m. Do have a lovely night. Bye.
Thank you. Bye everyone.
Thank
Please
you.
don't
Bye.
miss the contact. So let me take a picture of the contact so they can message him. Okay. So thank you very much. Have a lovely day. See you on Sunday.
Thank you.
Bye.
Good